All right, what's up, everybody? Welcome to another episode of the Bootleg Weekly. I think this is episode 3, Roy?
Yeah, that's right.
Three?
Episode 3.
We're making this a full show now. I love it. This is episode 3. We're going to be talking about Shopify. We're going to be talking about Robinhood. We're going to be talking about a whole bunch of different names. But as always, this is a podcast in protest of Tanner. And this is how this started. And really, it's a place for us to just talk about whatever stocks we want to talk about at any given time without any restriction on, a format or any language restrictions. We have to be PG. We can do whatever we want here, really. Guys, how's it going?
Good. Really good. Been a fun week so far. A lot of things to talk about tonight. And one thing, just to kind of set some ground rules and to give a game for people to follow that we mentioned before, but Steven, you don't know this yet. We're deliberately not going to talk about that company that we talk about on Friday. So whoever says the name of that company first, and we all know who that is, what that is, or the name of the CEO loses. All right, and we'll see if somebody can go the entire night.
I don't know what company you're talking about.
I don't know either. It may be the same stock that you purchased for me, but
the company who may or may have not had an official partnership with the NBA,
which we won't talk about today.
which we won't talk about today. And Steve, if you're the one that loses.
So we're not talking about the company that is doing a partnership with the NBA.
The official bank of the NBA. That's the company. I can't remember their name, but that's the one that we're not talking about. The official bank of the NBA.
And why are we not talking about them?
Because we're saving it for Friday.
Why?
Bootleg,
baby.
There's so much sabotage Friday by talking about
it. There's so much other stuff to talk about, dude. Like, there's a lot that's been happening. So
This is in protest. So you know who did talk about them today? Tanner. And so us not talking about them, that's a good protest. This is absolutely in protest. Right. Steve, if you mention the CEO or if you mention the company or the ticker, pick a charity of your choice, baby, because you're donating to it. Okay, so now that we're not talking about that company, what do we want to start with?
Let's do that. Let's do that big movement after hours. That's fun. Just real quick.
The big movement after hours.
Yeah, Lyft. Yeah, if anyone's in the chat is in Lyft or bought or sold, mention that. But if you didn't catch it, Lyft also reported after hours. I'm not in that company. I don't care about that company. I don't know why you'd invest in that company other than Uber. But they went up and they popped up 60%. And people like myself that were not in it, I was looking at Robinhood, but I'm like, what's going on with Lyft? Like, what did they do? Well, they announced a 500 basis points improvement. What was it in their wasn't revenues? It was in margins.
EBITDA.
EBITDA. Thank you. I knew I was getting it wrong. And it turned out it was 50. It was a big fat finger typo.
Yeah.
And they're probably going to get sued.
You think?
I think so. Yeah.
It came from their CFO, didn't it?
Well, I mean, they corrected it quickly in earnings, but if you were one of those people that during that time that you were like, okay, 500 basis points improvement is insane. I'm buying in right now. Something's happened to this company, and you lost money on that. Like, I'm not a lawyer. My undergrad was lining up to be. I didn't end up doing that, but man, you should probably talk to a lawyer. That's all I'm saying.
Well, so 2 things I'll say. Number one, the stock shot up 65% upon this and then gave it all back. I think last time I checked, it was up 15% from 65 in after hours once they corrected their error. And I think, we've all been there, whether you're a CFO or whether you're not. I think we've all been at that place where you just try to sound a little bit smarter to your friends. And you say basis points instead of percent, and you fuck it up. And it happens.
That's what happens, yeah. Yeah, every single time I've been a CFO of a company. No, I'm just kidding.
Steve, any thoughts on Lyft there? You think they're going to get sued or no? Steve, what do you want to talk about? Let's start there and work our way backwards. No Pokemon cards. What else?
And no company that shall not be named.
And no dividend company.
What about a company that you may have purchased like towards the end of the year? that had earnings recently. Would you be interested in that?
I skimmed through the earnings. I really didn't look through it closely enough to add anything intelligent about it, to be honest with you. But I did find interesting that Carl Icahn made a purchase. What company was
Yeah,
he?
it's an airline.
JetBlue?
It was an airline.
Yeah, JetBlue. He took a pretty big stake in.
Is he still like relevant? Like I know he was, a huge corporate raider and all that stuff, and he had this whole spat with Bill Ackman over what was it, the MLM company,
Herbalife.
Herbalife. But I haven't really heard anything about Carl Icahn like in the last several years, at least.
Really?
Hindenburg went after him last year with
Really?
one of those big pieces. It was before they did the one on Square or Block rather. I'll never not say Square. And yeah, the stock ended up, he lost some money temporarily, but I think it was mostly smoke, not a lot of fire there. So
Yeah, I mean, I don't know. Hindenburg too. Like I don't know. They're somewhat irrelevant too. They just released all of these short reports, and it used to be a big deal, man. I remember back in 2019, 2020, when it was like a Hindenburg report, you're like, oh fuck, somebody's gonna drop 50% tomorrow. And now they just like, I think the last big one that they released was on Block, and it's just it wasn't based on solid due diligence. It was based on it was just like a random like David Cavarini came out on a certain company. And just did a half-ass, research. I'm going to laugh every time here.
Yes. No, I like Block. I'm not a fan of the CEO at all, but when I saw that Hindenburg piece, I was like, come on, like, what are you saying? Like rappers use it and drugs, and it's like, whatever. So when you see something like that and it's like completely rubbish, you say, okay, buying opportunity. If you're convinced in that company, that's a good opportunity for you. So, but yeah, you want to talk a little bit about Robinhood, and we can rope Steve back in and tell him about the company that he lightly looked at their earnings on. Did you get to see the earnings or look at it?
I just skimmed, and I'll sort of read through what I skimmed. I didn't really look at the specifics for their in-depth numbers. I just looked at the high level. So Robinhood beat on the both top and the bottom line. They came in at 471 million in revenue versus 456 million expected by analysts. And the bottom line came in at positive 3 cents EPS versus negative 1 cent expected. The transaction revenue, I think, was a highlight, came in at 200 million versus 191.2 million. Of course, this bull case here about the transaction revenue is, essentially at a high level, as rates start to fall, more money floods into equities. As more money floods into equities, more people are going to be trading. Robinhood makes a cut of all of that trading, hence the transaction revenue importance. That's about the extent of it.
Yeah, no, I own Leaps. I don't own shares. I'm looking at this year as a kind of a unique opportunity for Hood because they basically have the three main revenue streams where they have the interest revenues, they have transaction revenues, and then of course they have the crypto revenues as well. It's part of transaction, but really that's a bit of a separate one. And never have they had all three of these firing on all cylinders at the same time. But I think 2024 is a year, still have high interest rates, have the bull market, and have bull crypto. So I think it'll do really well. The earnings was a bit of a surprise for me, but in a good way. But like the best thing was just kind of the overview of the entire year. If you're looking at the operation expenses, they were kept very much in line. They actually reduced stock-based compensation. They're keeping that in line as well. They had two really tight acquisitions. And then you just look at their the products that they actually came out with. So the products and innovation, the platform just keeps getting better. Robinhood Gold is a very good value proposition. They have reoccurring subscription revenues. It was just overall a very strong quarter. Of course, UK is starting to ramp up, and same with Europe for crypto. So I think Steve, even though he doesn't care a flip about Robinhood, I guess, but he's a shareholder. Like he's going to love this company. I still think out of the four of us when we did our stock giveaway, Robinhood's going to do it, man. I'm telling you, it's going to do it. If you had picked Celsius, maybe not. But no, Robinhood, I think, has this in the bag for the year.
I mean, I kind of wish I picked Celsius. but we can talk about that another day.
Yeah.
Steve, you want to address this comment?
I mean, the company that I picked is going to win.
What did you pick, Steve?
I mean,
You didn't pick a company. You picked like 3 fucking companies. You try to get technical with it.
no, I wasn't allowed to. So the company that I gave to Roy for Christmas is going to win.
Which
what was
one
that
was that
company,
again?
Roy? What was that company?
I mean, if I say it, how much would you like me to donate?
Yeah, I mean, I have no horse in the Robinhood race. I know that I can make money on Robinhood. I know that they are undervalued compared to the cash that they have on hand, international expansion within Europe.
So
I just, on principle, am against, putting money behind Vlad just after that fiasco that happened. Like, I think that he's permanently lost me and I don't care. It can 10x, can 100x. At the end of the day, I have to have some principle, and it's easier to do that when you're also having like 5,000 other stocks that you can pick from. Like, I'm fine to let Robinhood go. But at the same time, if Vlad is not at that company, then I mean, I'm not sure. Maybe, but I don't have any interest at this moment to put any money behind Robinhood. I'm glad that they beat. I think the thesis is solid about transaction revenue picking up. At the same time, though, by that same token, I don't think transaction revenue is necessarily, and I might get like totally flamed for this, but I don't think transaction revenue is the most sustainable form of income you can have out there. It's so volatile and so unpredictable based on the macro. Similar to Coinbase, right? Like when crypto is tanking and when we're in a what do you call it, like a bear winter, crypto winter, whatever, then Coinbase looks horrible, but vice versa, right? That's why Coinbase has gone up over 100% over the last 12 months because of Bitcoin.
Yeah, what I think that they're doing is really diversifying away from just being fully reliant on the transaction. So they have a really resilient, I think, model. Not as resilient as a company that I almost said that I cannot name, but I will say that I understand your Vlad argument. A lot of people don't like him. I don't think he's the most amazing CEO. I think he's come a long way since the GameStop debacle. And I ended up investing in the business. I think it's good as a trade, long-term hold. Maybe not. But I feel the exact same way as you do with Block. I think the company has a neat, mostly neat acquisitions that they've done other than Tidal. I don't know what in the world is going on there. But, I don't like the Blockhead. If the Blockhead was gone, I would probably invest in Block. So I get it.
I will say this about Robinhood. I know several people that have moved money there because of their match and what their offers. So in the slide deck, they said something about continuing deploying capital. I think that they're going to get a lot of clients. I really do. Because, I mean, I know people that are willing to move for 3% and have their money sit there for a couple of years because it's a free 3% on their deposit. So I don't know. It's an interesting story. I need to really look more into the numbers. I've been so swamped with work. I just haven't had a chance.
Yeah. Oh, and there's a lot of neat things. Like if you find anything to go over, we'll talk about it sometime. But there's a slide there that I hadn't noticed before. Maybe they do it at the end of every year. I wasn't in it last year. They had a cohort slide where it's showing the amount of capital that they bring over time, and they're reaching wealthier clients. This is not just because the federal government's giving a bunch of money away. This has been a problem for Robinhood in the past. And I know that they've diversified their product platform with the IRA match, the retirement accounts, and all of that. But they've usually just reached poor degenerates that got a stimulus check. That's it. Maybe a couple other people. And then the Amits of the world. I love Amit, but I'm just saying, that's their demographic. Somebody young, somebody that hasn't had money for a long, long time. It's kind of newer to trading. And now they're starting to reach people that are the Celsius type people in the world, a little bit more refined.
Do we think, Celsius type people are more refined? Also, this game is honestly giving me so much anxiety because I don't know what word is going to come out of my mouth next. And I'm just so scared that I'm going to say it. But
it's so hard.
Yeah. Do we think that Robinhood can maintain the EPS, like the profitability, considering their international expansion in Europe?
Yeah, that's actually what really impressed me. So if you looked at the expenses line, marketing went up. That's where they actually put their cost of acquisition, and it bumped up some, but they were their other expenses are very operationally efficient without cutting research and development, which is their bread and butter. I don't see a way that they're not GAAP profitable. And then the comments of the CFO during the actual earnings call seemed to indicate that they were expecting GAAP profitability the rest of the time. The only reason why they missed the previous quarter is because of that big settlement with GameStop, which rightfully so. I mean, they should have been slapped, and they were slapped hard. I think 110 million. So
That's not that hard.
Yeah.
I mean,
easy. Profitable company, not burning money, and they're basically cash. Like it just, I was really hoping that they'd do this kind of earnings, and that that they would slightly miss on the EPS figure, and that they would just tank off like a firm, like Shopify did today, and a lot of the fintechs, that they do really good earnings and they just get cooked off. If that happens tomorrow, I'll triple down on my position actually, because
there's actually a company last week that had really good earnings but sold off. I can't remember the name.
Oh yeah, PayPal. Yep.
Yeah, that too.
Steve's like, I'm going to win the game by filibustering in
Steve,
silence.
Steve, look at this audience, man. Like, Steve is multitasking. Steve is sorting out Pokemon cards. Steve is on Bumble. Steve, are you on Bumble? Don't show us your phone. that makes Stephon is swiping.
No, I'm buying Pokemon cards.
Steve has a future in Congress.
I mean,
it's not the first time I've heard that one.
He would not be the worst choice. So,
all right, Steve, what's the next topic? You pick the next topic. Do you have any thoughts on Robinhood's earnings or nah?
I need to go through the numbers. I've been so swamped that I haven't been able to go through them. They're very interesting. I would like to see their net interest income, and I need to run the numbers, because with the hot CPI print today, I don't know. This is a double-edged sword. I mean, how can you expect housing to go down if you keep rates higher for longer? It's simple math. So, just skimming through the report today, you got to think about it. If you are going to rent, somebody needs to own that asset. When somebody owns that asset, they're probably taking a mortgage out on it. Taking a mortgage out on it at these rates, your cost of ownership is increased compared to a mortgage being at 4%. I just don't see how rates or rents are going to come down with rates at this level, especially with everything else costing more. It's just, I don't know how much good we're going to do keeping rates at these levels for longer at this point. And I'm afraid Powell's going to be data dependent still, and he's going to come out at the next meeting and say, we really need to see what PCE comes out at. But I don't know. This report wasn't great.
Can you imagine if they had cracked and they'd been like, yeah, we're cutting in March or whatever, because Powell was more, hawkish, which is fair. He needs to project hawkishness. And now, the fear is that, the fear was back in December that inflation would creep up again, that it wasn't so short-lived, that the economy is not the stock market and the economy is hurting, despite what the jobs report might say, that, hey, the landing is not going to be so soft, in fact. And now we all saw how red the market was today. And I think that's obviously a direct result of that. What does this mean?
People are worried that Powell is going to extend rates higher for longer. And they're really realizing that we're not getting 6 rate cuts this year unless something really goes wrong. And guess what? You can't have a recession when the economy is running like this and there's a ton of jobs. Like I don't understand what these guys are thinking. I don't know.
Do you think they should cut in March?
The only true indicator of recession that is foolproof is unemployment increasing by a percentage point or more. That's the number one indicator. We're not seeing it right now. And the problem with this whole thing is higher rates for longer hurts so many people it also indirectly hurts everybody because it is making the national debt, the interest on the national debt, balloon. We're paying over $800 billion a year in interest payments on the debt now because of where rates are.
Well, partly
I think
because
that Powell should cut. I don't think he's going to anytime soon. And I am becoming very hesitant to believe it's going to happen in May now.
yeah, it's after today's print. I know part of it was seasonality. People if they're going to raise prices, many of those prices hit. It's a new year. Let's bump things up a little bit.
Right.
I don't know that that's as big of a factor as it has been in previous years because companies have seen fit to adjust that, but it still happens. And of course, rents are just kind of a flawed measure. But yeah, I was expecting a 2 handle. I really was. I was like, I know all these arguments, but I think 2.9 is going to be where it's at. 3.1, not good. So yeah, I think that March is pretty much completely off the table at this point, and May is looking iffy, and that's I think that's dangerous. If more than 3 rate cuts happen at this point, it's probably really bearish. Something is cracked. Banks are failing, or there's a whole lot of political pressure on the Federal Reserve. They're actually not a federal branch. Technically, they're independent, but at some point, the national debt is spiraling out of control, and they got to curb that thing through both spending, which they're spending like crazy right now. And both parties are guilty. I'm so not trying to be political. This is the reality. But the interest rates make it such a huge pain point. So yeah, they're going to cut at some point. But they may wait until there's lasting damage done because it's a Federal Reserve. This is what they do. They wait and they do it too late.
I mean, look, man, like NASDAQ hit, what was it, 18,000? Like the index is at these record highs, and everybody's, I think market is what, greed or extreme greed at this point. And, right now, this print was exactly what the market needed. And you saw how hard it dumped today. It's just the market taking its medicine, readjusting expectations for what the cuts might be towards the end of the year. And in fact, a certain company that we know of actually forecasted a weaker economy with a higher level of unemployment and fewer cuts.
Yeah, I mean, look, the economy is not weaker right now. The economy is still strong. It's just rents ticked up. It threw the CPI off. And now there's a fear that Powell and the rest of the Fed is going to have higher for longer. And the reason REITs sold off today is because now you run into the worry of not being able to refinance debt at lower levels, right, where the profit model makes a lot of sense. And now you bring that back into the risk where if you're not refinancing debt at rates that make sense, there's a higher chance that these companies will turn the keys on back to the lenders, and that the lenders are going to have to sell the assets for pennies on the dollar to get them off the books. They're going to recognize losses, and regional banks have a lot of debt tied to real estate assets. Mm-hmm. So there's a lot of things. Like, now's not the time to try to thread the needle and be perfect in every aspect. And I would much rather see the Fed start cutting sooner, but don't cut crazy. Cut in March, wait, cut in June, March. Wait. That's what I would rather
I
say.
agree. March.
I'm not saying that they're going to do that. I would rather see them cut 25 basis points in March, wait, see what happens. Cut 25 basis points in June, wait, see what happens. Cut again in August, and take it down by 100 basis points in 2024. For the simple fact that you want to protect yourself from companies having to refinance, which they do. There's 2 to 3 trillion of debt coming due in the next 2 or 3 years. You want them to be able to refinance at rates that make sense for them and their business model, rates where the banks can still make money and lenders can still make money. You want Americans to feel the ease on credit card rates and everything else, and you want to unlock the housing market. Eventually, the free markets will work themselves out, and I think that in this information age that we live in, we're living and dying on every little thing when we don't have to. And we're doing more harm than good at this point.
Yeah, I completely agree with you that if I was in charge, I would do a 25 basis point cut in March as well, and just slow. The thing that even the Federal Reserve at this point seems to be forgetting is rate hikes. They take a while to be fully digested. I've seen varying figures, some as high as 16 months, some 13 months, some 9 months. But it takes time to go through the system. A 25 basis point cut is mostly optics. It's saying, hey, we're going to start slowly taking taking the pressure off. And it would happen at the same time as the BTFP is expiring. If you're going to do that, it'll just relieve a little bit of pressure on the banks. The banks don't, it's not going to be as bad going down as it is up. But what the banks don't need right now is a dramatic shift and change in one direction to another. Like it helps as far as the assets or the balance as far as on those loans if they do drop, immensely. But predictable, slow, steady is exactly what is needed here. And so, yeah, I'd just start cutting very slowly, very gradually. I don't really see any way with a 0.6 falling off next month and without the seasonality in February of us actually not having a two handle. So that'll help a bit too. But I don't think they'll do it, but that's just what they should do.
Yeah. I don't think they'll do it either. I mean, if we know one thing about the Fed is that they are historically behind all of the data. They raised rates too late. They're probably going to cut rates too late. So I'm still expecting the back half of the year to be.
They're basically Tanner. Like, honestly, they're always freaking late.
Not YouTube. Dude, the chat is going off about Tanner. Something about an ant farm. It's just hilarious.
I love it.
You guys are having a serious chat over here, and I'm just dying by the chat.
Yeah, I mean, look, I would rather rates stay at 3% and then only move them if you absolutely have to.
Yeah. I mean, 3%, we can, it gives the flexibility either way. So that's actually not a bad end rate.
And it's a good number where everybody can do what they need to do. You can borrow money where it doesn't break the bank. You can lend money and make good money on the lend. And mortgage rates are not that restrictive because what does that mean? If the Fed funds rate is at 300 bips, what do you got? 4.5%, 5% mortgage rate. So maybe a little lower with a credit union. It's not the worst idea in the world. Treasuries still get a decent yield and everybody's happy.
Yeah, it's really stable. It doesn't superheat, it doesn't super cool. So I don't think they'll do that because it's the right thing to do. It's just they're slow. Maybe they'll surprise us. The craziest thing to me, and I know that this inflation is not the Federal Reserve's fault entirely. In fact, not even mostly. It's federal government, their policies, and we won't go there. But they insisted for the longest time that this was transitory. Does anyone remember that word? Like transitory? Like that went away.
Walk it out of my head.
It was a joke. Like I couldn't believe it. It's like we're printing all this money. You're giving all these people cash, and whether that's right or wrong, whatever, who cares? You're doing it. How in the world is this not going to cause inflation? And you have all these leading economists like, well, because of this, that, and the other. And it's like, come on, like do simple freaking math. So and now they're going to be doing the same thing. Higher for longer, data dependent. These, I think, at some point will just be an absolute joke. We're not quite there yet, but they're so obdurate. It's frustrating.
Yeah, I'm looking at CME Group right now. And I mean, for the May timeline, they have a 61% chance of a 25 basis point cut. So they're still factoring in May. Not much has changed. I mean, March is only 9% that they cut 25 bips. This has really not changed off of this CPI report. I would have thought that these percentages would have been much different. We'll see. Hopefully I'm reading into this too much, but I do not have confidence that we're going to get a rate cut anytime soon.
Yeah, I mean, Shelter just takes.
When do you guys think is the first rate cut? Let's do that. June? Are we thinking June?
I mean, I've been saying May, June. I don't know which one, but I'm kind of leaning toward June now over May only because of this CPI print. But it's going to be one of those 2 months unless something drastic happens. But shelter is not going to come down with rates at where they are.
Yeah.
Yeah, June, I think so too. I mean, we both agree it should be cut in March, just slightly, and then wait. But they're going to wait, and they're going to wait until something begins to crack. And I hope it's not the banks, because we're in a company that might be very much impacted by that.
I mean, really
which
think
will
about
not be.
that for a sec. Why should we want people to be out of jobs and unemployment to go up for the Fed to cut rates? That makes no sense whatsoever. Like, nobody should be wanting unemployment to go up to get a rate cut. That's crazy talk. And quite honestly, the Fed should step up and do the right thing, and they should cut rates so we don't get into a situation where companies are defaulting on debt and being in a situation where the banking system could be under a ton of stress again. Like, why do that to the American people? It makes 0 sense. And help out the tax bill and stop spending this much money on interest on the debt. I mean, it's just crazy that rates are where they are.
I'm just throwing up this comment because I saw the jobs report out in Canada, and it came in like double expected numbers. And then I looked at the breakdown, and 90% of it was government jobs, and like 10% was private sector. It was absolutely ridiculous. And especially, gig workers too, like they're counting the part-time as well. And so I don't know. It's just, right. Like I can't take these things in earnest because it is also an election year. So I have to also take that into consideration, that there might be some, weird things going on behind the scenes because of that. I also wanted you, Steve, to respond to this comment as well. If you can read it out and then just give us your thoughts. If you can, I'll just read it. So this person says it must be no later than June, because if it's later than June, then that's too close to the election, which is in the fall, and that's going to be considered meddling.
I think it could happen later. I don't see a reason why it couldn't, just based on that. It's been I haven't looked at the history of that on an election year. Boy, I have to go back a ways where it actually mattered. Like, honestly, even if it was raised or lowered, except for back in 2008, it wouldn't have really mattered too much. No, I don't think that's that big of an issue. But I know that politicians on both sides of the aisle would like to see those come down. Of course, they don't like inflation either, but it causes such stress on the budget and on the deficit. So they also got to stop spending, which they're not willing to do. But yeah.
Fair enough.
And guess what? Demand can be fixed with more supply. I mean, there is such a thing as supply side economics.
Explain that.
Well, to meet demand, you increase supply.
So you're saying there's too much demand right now?
No, what I'm saying is, if demand is increasing, you increase supply to meet the demand and have a little bit more supply. That'll take inflation out of it.
Are you talking about housing?
Just in general, general economics. It's not just housing. It's everything across the board. But you can control this with making it more business friendly and opening up the markets and increasing supply to meet demand.
Yeah, but it's not that easy, right? Like, that stuff takes time. You can't just will goods and services into existence, first of all. Second of all, like, I don't know. Like, I think that...
No, but you can let the free markets work themselves out.
Like, what do you mean by letting free markets? Like, removing sanctions on Russia? Or like what?
Meddling in the free markets, and you start constricting business, and you start playing around with rates, the exact situation that we're in happens.
So, like, give me an example about what the government is meddling in that they can let free markets do their job.
I don't want to get political by any means, but when you start restricting energy, so to speak, start restricting natural gas, and you start doing certain things that make commodity prices increase, that becomes restrictive to business, and other things start to go up as a cost. And we should be doing everything we can to make it as easy as possible to compete. And when you do that, you will have a better economy.
Yeah, no, I'm not against that. I mean, I'm not against that, but I'm also not hopeful that that's going to happen.
I get it.
I think that this year is going to be like, I think that expression when they're like, it's always darkest before light. I think that's sort of going to be this year from a political lens because of all that's going on. And I mean, not to get political on this pod, but just the behind the scenes stuff leading into the elections and pre-polling and the caucuses and all this stuff. Yeah, I think it's going to be a pretty contested sort of hot button issue. And that's, for whether we like it or not, it's going to bleed into the output of the economy because those are so closely tethered. And in reality, on paper, they shouldn't be that closely tethered. But
Look, I'm more worried about somebody doing the right thing by Americans. And I'm more worried about people actually taking a step back and looking at the fact that there are too many Americans that are having a very difficult time right now.
yeah,
And at what cost? Rates are a big factor of this. And most people utilize a credit card for many things in their life. Not everybody pays their credit card down in full. Okay. Most people do not pay cash for a car. Most people do not pay cash for a house. High rates makes it very restrictive for people to live. And we should not be in this situation. And I really hope that on both sides of the aisle, these representatives get their act together and we're able to put ourselves in a position where the economy becomes better for everybody.
yeah. I mean, like that's a very lovely sort of vision, Steve. It's never going to happen. I mean, because of this in part, and then also what's going on at the border and all of the influx of new people that are joining, and it's just like it's a bigger mess to unravel, and it's symptomatic of just more fundamental changes that need to happen in the system. And the economic repercussions, I think, are going to be a result of those changes that happen, not necessarily like, oh, let's just pull the levers a little harder on, fiscal policy and it's going to fix itself. Like you have to fix the underlying economy first so that you don't have to resort to pulling the levers of fiscal policy.
Yeah, I think the economy. I'm with Steve on that. That the economy can sort itself out pretty quickly, a lot more quickly than the government trying to tinker with the formula and get it just right. It doesn't work. And I'm not saying go back to laissez-faire. That completely like it was, in the 1800s for the most part. But we were in at least in my estimation, a somewhat similar debacle back in the 100 years ago. So we had elected Warren G. Harding. There was a lot of similarities between him and our two most recent presidents, frankly. And he, of course, ended up passing away. Calvin Coolidge became the vice president. And for the most part, he had some trade protectionist things that he did, but he allowed the economy to sort itself out. And we were entering this time where we had just come out of a major war. And so there was a massive government spending. There was a recession on the horizon. Everybody was worried about the economy. There was just a lot of issues, a lot of political issues, a lot of demographic issues in the United States as well at that time. And a lot of them are very similar to us. And then they were hitting this decade where there's a lot of unknowns and uncertainty that during the war, the technological prowess of mechanization really ramped. And so that began to actually hit the United States as well. And so there was a lot of concerns about people losing their jobs because of that. Yeah. And of course, instead, Coolidge, there was differences as well between back then and now, but I see a lot of similarities where somebody came in, they said, hey, we're going to actually operate under fiscal responsibility. We're going to pay back the deficit. Every single branch of government, he made them actually do cuts every single year while he's in office. They got actually very painful by his 7th year, and ended up that the economy absolutely roared. And I know eventually the Great Depression hit. That's kind of a whole different discussion, but it allowed the economy to do what it needed to do. There was a little bump down, but it worked itself out very quickly. It would take a little bit longer right now, but realistically, I think that works better than somebody who has no idea what normal people are going through, how normal people think, how much they're suffering right now. Somebody like that trying to make decisions where, they've, this. I'm not naming any names. Well, I can name one, and they're on both sides of the aisle. Dan Crenshaw and Nancy Pelosi both do very well in the market, and I don't think it's because they're the next Warren Buffett.
Yeah,
that's all I'll say with that.
I mean, since we're bringing up history, I mean, I'm not like a huge history, major, but the last time we had massive unemployment, like through the Depression, Roosevelt stepped in with a New Deal through federal policies to create new federal agencies to essentially incentivize public works programs for the unemployed to restoke activism in the economy and get everything sort of rolling again. Similar to Steve's point around like, hey, we need more supply, but I don't think that can happen today because the incentive structures are so far gone. We need younger leaders because older leaders literally will not be there to see the fruits of their labor to put in place a 10-year plan or a 20-year plan. They're just too old and they're incentivized for short-term thinking. I remember when, and again, I hate being political on this pod because it's always taken the wrong way. But like, I remember whatever the conflict was with the rebels, and, immediately senators were like, let's just bomb, countries and let's go into a hot war. And you're like, what the actual hell is going on? Do these people have families? Do they have children? Do they have grandchildren? Like, I don't understand, right? And so I just think that, again, the incentive structure has to be fixed. That is a prerequisite of fixing the results, man. You can't focus on the symptoms until you focus on, like what is causing those symptoms, like, and so I think the diagnosis is the problem or lack thereof. And the fact of the matter is, like, you need term limits, you need younger leaders, and you need leaders that have a long-term vision. And all of those things go hand in hand. And then if none of that works, as a last resort, you can, pull the levers in terms of saying, oh, do we want to increase inflation or decrease inflation, increase printing, decrease printing, whatever it may be. But that should be as a last resort. Now it's just like, hey, we need to approve more spending. Nobody talks about like the cuts that you're making or how we're going to be more efficient or what is the scrutiny on how this money is going to be spent or actually what is the transparency on how these bills are going to get broken out. No, man, it's just like, hey, we need more money, big number, and that gets passed through. And it's just the taxpayers that ultimately pay for it. And I'm not surprised why people are feeling disenfranchised. It's because they are massively disconnected from the political elite to the actual working person.
And it's a very unhealthy thing to have. And I don't know what the solution is fully, but to have this massive gap between how the lower income earners versus high income earners are doing. Yeah, there's probably a very nuanced approach to be able to solve that over long term. I don't know, but I know a lot of people that are very deeply unhappy that are really struggling, and it causes issues in a nation where you have people that are just living paycheck to paycheck that are barely able to get by because of stupid food prices and rent prices and mortgage prices and car prices and insurance prices and healthcare prices have gone up immensely while their wages have really not.
Roy, let me tell you, man, like the thing that eats away at me and genuinely eats away at me, and I think about this from time to time, is this corrosive disenfranchisement of the younger generation where I have people my age who basically say they're never going to own a house in their lifetime, and they accept that fact, and you sort of have people, willingly being subdued into this acceptance of they're going to live a life that's shittier than their fathers and their grandfathers lived, and that's fine. Whereas 50 years ago or 70 years ago, these young people would actually be motivated to stand up and to actually make a change in politics. Whereas now it seems as though younger people are being less and less interested in politics as a whole because they think the entire system is rigged. They think that the game is, the pie is already divided and that the power structures are already in place and that they are immovable power structures in the first place. And so the point is like, if you had, let's say, the Great Depression in the 30s, that youth that was growing up there was still disenfranchised, but they were also motivated to be that change for the future. Whereas today, all I see around me is disenfranchisement. I don't see any activism that is coming out of it. I don't see any engagement that is coming out of it. I don't see any constructive, positive, aspects that are coming out of it. So I just see wide acceptance and, just broad-based sort of submission to, hey, this is the norm and that's how it is and it's immovable. And I think that's the thing that sort of eats away at me a little bit.
Well, we need a different way of thinking about things. And one of the fears is if they cut rates, the economy is going to boom even further and inflation is going to go up. But you want a booming economy. And I'm looking at the unemployment rate. We're at 3.7%.
But like, so
I'm going to choose my words very carefully here
Mhm.
because I don't want to say something that can be taken out of context. But when you reduce interest rates, businesses are more incentivized to expand because the cost of capital decreases. That is good for everybody because more people have jobs that want to work. Businesses can acquire the goods that they need to increase output at a more cost-effective method.
Mhm.
And there is more supply throughout the economy, even if demand is going up. And you can curb inflation with matching supply to demand. And we should want an economy where everybody can find a job and everybody can work. We should not want, when you look at what going to 10% unemployment does to you, think about the banking crisis. That's the last time, besides the blip with COVID for those couple of months, the last time that we actually had inflation at 10% was during the financial crisis. Like, we don't want that to happen again. And if we keep rates at these levels for too long, the big banks will be okay, but the regionals are going to become under a lot of stress. That's going to have a lot of ripple effects throughout the economy with small and middle market businesses. And that's not good. We really should have rates at 3% and then tweak one way or another if we find ourselves in a position where we need to do so, rather than taking rates to 1 or 2% for a period of time and then jacking them up and then bringing them down. It's not good. Let the business model. I would rather see 3% for a long period of time and have to tweak as necessary. So everybody can build that into their business models of the cost of doing business. And we can just make sure that we have a strong economy. I mean, that should be the number one thing. Like, there's too much bickering on both sides. And people should be for progress and for strong economic activity.
Well, like, okay, so here's the thing, and I just want to push back a little bit just for the sake of conversation. I take COVID as an example, right? It happened and people got stimulus checks in the mail. They got their, PPI or whatever it was called. And everybody was enjoying life at that time because they're like, okay, well, I'm staying home, so I'm not spending as much. I'm saving more money and I'm getting these paychecks. Great. That's all well and good. Market boomed. And then you had the hangover from that. And the investor class, right? People like us, for example, people that are doing pretty well, we're in well-off jobs. Like, I know the three of us definitely are. We have plenty of disposable income to put into the market. We're investing for our future, and that's all, well and good. We're going to be fine. But even if rates fall, inflation is still, I don't care what the headline number is, 2%, 3%. Those are, manipulated numbers in terms of how they view inflation. Look at how they viewed inflation in 1980 and 1990. And then look at how they, like, by that measure, and your inflation is going to be like double digits by real terms. I mean, I see my family, man, like every time they go and they don't invest, right? They just don't. They were never taught it. It was not an education. They didn't have that in their time. And they go to the grocery store and they're like, oh, I actually, the entire COVID saga, is not a net positive for me from a financial perspective, because yeah, I did make a little bit more money in 2020, but I'm actually paying for it and then some in the form of 40% increases at the grocery store. So I don't know how a lower rate environment is going to help them.
So, and let's unpack that a little bit. So, one, you can always meet rising prices with increasing supply or through innovation, one of those two. Now, as far as food, there's a lot of dynamics to this that people seem to forget. High energy prices is one of the biggest red flags for the food industry because first you need fuel for all the equipment, and then everything needs to get transported. So if diesel is expensive and if gas is expensive, not only is the manufacturing expensive, but the transportation is expensive. And fertilizer, predominantly nitrogen bases through phosphorus. I mean, it's just so many components of it. And this is where we need strong economic activity, because when you don't have all these restrictions and you allow companies to compete and you have an abundance of everything, energy prices come down, manufacturing comes down, and prices at the cash register come down because the input costs are less.
So let me ask you this, Steve, and I understand this because here in Canada, the whole commotion was against this carbon tax for that exact same reason. It was a method to fight inflation because it was that tax specifically applied to farmers, applied to transportation, logistics, applied to all the aspects of the supply chain. And at the end, the consumers ended up paying the difference in more ways than one. And I agree with you. If the input costs fall, the output product, in theory, should fall. But I guess where I'm getting at is, will it fall proportionately? Because I'm guessing that
if there's enough competition so think of it as like Coke and Pepsi. If Coke and Pepsi keep their prices at the same thing, it's always going to be there. But if you have a third competitor that makes another product that is just as good, that is half as much, they're going to take people away from that.
Right.
So
and if neither Coke nor Pepsi lower their prices,
yes, and that's a problem. But then it's people voting with their pocketbook and not purchasing the products. And in some cases, I get you can't take that stance because in a lot of cases, everybody needs certain things. But you can opt to go with something else, even if it's an unpopular option for a time. Eventually, the free markets will sort themselves out. And we have to make sure that companies can compete, because when you have competition, that's when everybody is in check.
Yeah. Yeah. It's so hard right now with the interest rates the way they are. Like if there was going to be, and the soft drink business is probably not the place to go if you're like a small mom and pop thing that wants to grow, but it's so expensive to borrow money. And it is almost impossible to borrow money if you didn't have just a phenomenal credit line already in place for 2022. And you're paying that cost of capital. Nobody really wants to invest in you, everything versus these mega companies in the United States. Most of those are very cash rich. And so in these high interest rate environments, it's a double-edged sword because on one hand, the big companies, they benefit massively from those yields. And small startup businesses, they can't even get started up because it's very tough for them to borrow. And so they can't really compete. But in a healthier rate environment where it's stable, you'd still yield some off treasuries, but you'd have hungry young startups empowered by AI, which really does help people start up much more cheaply. Like if you might even be able to get by with a chat GPT or something to just help draft stuff. Like I've done a lot of that. It works. And you can effectively not compete head to head, but you can compete for sure on price. If some of these larger firms are like, hey, we've raised our price so many times, we're not going to lower it at all. It's like, great, I can undercut you on that. I can save on margins on this. But it's so tough in this interest rate environment. It's just
guys,
not going to work.
I understand the economic theory, like by the textbook. Input costs fall, output costs fall, everybody's happy, and it's a transitory thing. I get that. What I'm saying is, I think that while the input costs may fall, the output costs will fall disproportionately less because it is so oligopolized at this point, because there are fewer options. And all that's going to end up happening in this whole fiasco is the investor class is going to get a little richer through dividends. It's going to get a little richer through capital appreciation. These companies are going to hit all-time high profits, all-time high revenue. And at the end of the day, the middle class is going to shrink a little bit because the consumer, like my parents, for example, who never invest, all they're going to see, maybe it's not a 40% increase on their grocery bill, maybe it's just a 20%, but that 20% is here to stay. This is not a bug of capitalism. This is a feature of capitalism that is built into the system. This is, if you've ever read Thomas Piketty, he has a great book called Capital, and basically the entire theory in Capital is that the rate of wealth accumulation, the rate of return on capital, grows faster than the economic growth rate. In other words, when given enough time, let's say 100 years, the rich get richer and the poor get poorer. And as a result, the middle class completely diminishes. And it is because of events like these that are fueled by inflation, because all my $2 are working for me, giving me dividends.
So,
And somebody who doesn't have that ends up paying more because of the corporations. Their incentive structure is completely geared towards their investor class.
well, let's not forget that the tax law should be revised significantly.
Right.
And everybody should pay their fair share. And look, I'm a capitalist, but there are things for the ultra rich that do not necessarily make sense. And look, I am a very big believer in a flat tax because everybody would pay their fair share. I mean, it's something where, and I've actually worked the numbers before, but you can balance a budget and have a surplus with a flat tax. And look, if you have somebody, let's just say arbitrary number of 20%, okay? Somebody that's making 100 grand pays 20 grand. Somebody that makes 100 million pays 20 million. If you're making $100 million a year, there are so many loopholes. And also, borrowing against your stock so you do not have a tax event is crazy.
Right.
It's crazy that we are allowing that to happen. Like,
It's
there
a
are
horrible
things that should just not be allowed. I mean, I think a lot of things need to be looked at.
Again,
It's just, there's so many things that we could fix, and things that are just, like you said, scaled toward one side of it, where it needs to be fair for everybody. Same set of rules for everybody.
Yeah, but it's never going to be that way, Steve, because I guess just for the 100 people that are watching, like, I think the main takeaway here is that the incentive structures have to change before anything meaningful can happen. Right now, Mark Zuckerberg can get paid a $0 salary and borrow against his stock because it's at all-time highs. And the only reason he can do that is because Nancy Pelosi also wants to do that, because whatever other senator also wants to do that. And so the people in power are reluctant to make rules that diminish their power, period.
Yeah, and that's an absolute joke, that structure. Actually, yesterday, so we may need to take like $20,000 or $30,000 out of the market for a bit for something within the next 6 months. And so I looked into that. I'm like, I mean, that's not a huge amount of tax, but it's like, okay, how can I avoid this? And they're long-term gains, whatever. But okay, like if I was going to do this, what would that look like? And so I was like, oh yeah, I can actually just be like the rich people and borrow against it if I need to. So. But we probably won't need to do that. I think we'll be fine. But just as a contingency, I was like, if we need this to buy this thing, then so yeah. That the rich do that all the time. And the crazy thing is as I was researching this and looking at long-term capital gains tax, that was the drumbeat of many articles. Was the rich do this? Be like the rich, do that. It's like, dude, that there should be a limit on that. People should not be able to like say, okay, I'm going to avoid paying tax at all. And actually, one of the articles went so far as to say, like, you can do this the rest of your life and just pay to borrow on that. And then when you die, then there's no inheritance tax. I think there is in some states, and over a certain amount, there might be now. I think they may have changed that, but there's really no death tax in the United States, and rightfully so. I think for smaller, under 10 million or something. I don't know, but. Like an Elon Musk can just borrow against his capital the entire time, not pay a penny in tax other than just normal sales tax and maybe a few taxes here and there. When he dies, pass all that money on to his kids, and it's never taxed at all. It's like, all right, I don't love taxes, but there's something broken right there.
Here's
like,
the thing: the people that can avoid it do avoid it, and the reason why is because they're smart enough to get to that place to earn all that money. And chances are, if they're smart enough to earn all that money, they don't want to give it to a government that is ineffectively spending it or ineffectively putting it to use, right? The reason why people avoid taxes is not because they hate their country or they hate their community. It's because they frankly feel that they can, multiply that fund more, or they can use it more efficiently, whether it's reinvesting in their business, whether it's investing in, stocks or equity markets or real estate or whatever, rather than what the government is going to spend that money for. And, I think that to Mike's point, it's almost like people should vote on ideas, not just faces. And that's a very, noble concept, I think. But the reason why democracy is a popularity contest right now is fundamentally an education problem. If more people were educated on all of these different alternatives and all of these different ideas and the ins and outs, then yeah, maybe they could focus on ideas, but they're not. And as a result, they focus on the popularity contest. So, I mean, not to get political, but.
Yeah, I mean, look, I'd much rather have a political party that has a American first agenda with making life better for everybody and like truly doing that. And it's just you can't fault people for utilizing the tax code because they're not the ones that wrote it.
Yeah.
Well,
they're just finding loopholes. And look, there are some people that obviously go above and beyond and they get caught and they get put in jail and have huge fines. There are many people that are playing within the rules that was written through the tax code. And I think the tax code needs a full overhaul. Yeah, and the easiest way to do it is a flat tax and make sure that everybody pays their fair share. I mean, what we're doing right now isn't working. And some of these loopholes are costing so much money.
Yeah.
And it's just not good by any stretch of the mind. It's just not good.
Think about all of the outflows that go out of the US to avoid some large tax, like not just individuals, man. I'm talking about corporations incorporating in other countries because it's a few percentage points lower. Like all of that could be money that's accumulated by the US. I mean, the businesses are in the US. The ideas are from the US citizens, from Americans, entrepreneurs. The entire working population of that company is US based. All of that innovation is US based. And yet the US doesn't see any of those proceeds. Why? Because the tax incentives are so fucked.
Yeah, it doesn't make any sense. There's a lot broken in the system. There's a lot of good stuff too. So I don't want anyone to go away and just be like, "Hey, we're
listen, this is still the greatest country in the world."
And the economy is hopping, and there's actual real growth and innovation. Like that's one of the reasons why the market is roaring. Is not just the idea of, hey, rate cuts will save us.
Yeah,
dude, look at the actual earnings. They're coming up just golden for most companies. And I mean, there's a few like even when they get sold off, we've talked about some fintechs. We didn't talk about Shopify, but they had really good earnings. They'd written up too high, and it's the quarter to sell off fintech on good earnings mostly. But I mean, from large cap to small cap, they are putting up good numbers. The economy is good. There's good unemployment numbers, or employment numbers rather. And actually there's real wage increases relative to inflation as well. So a lot of good stuff. Just there's some issues on the horizon that have to be fixed, or it's going to cause some major, major pain. And yeah, I agree. Like the longer that this sort of condition lasts, where people feel like powerless, they're like, hey, I can't do anything to get out of this hole. I'm just going to live paycheck to paycheck. I could never afford to have a house. Like, just a quick anecdote. We have 3 kids. So one of them, she's 11. She didn't count. But we have she's a kid, but she cannot make her own choices. She can't buy a house or get a job, or, I got a 21-year-old, and he decided to go the career route, and he's doing just fine. Still trying to figure out if he's in what he wants to do long-term or not. But he's making money, he's investing, he's saving up, but we've had talks and, about all sorts of stuff, finances and homes and getting married and having kids and all that stuff. But he's like, man, I can't ever afford to get married or have kids. Or if I do, it's going to be a long time from now. And he's like, I can never afford to have a house, like ever. And so we've been like, okay, yeah, it's kind of rough. You need a better career. Here's some possibilities. There are first timer opportunities when you buy for a house the first time. But like realistically, like at this interest rate and with the houses going up, and if they cut interest rates, the prices might spike. I don't think they'll drop like some might think. So it's just like, okay, how is this guy going to get a house? Like when we die, like that's not good.
That's
so
exactly it.
We do have a plan.
So I got something for you, Roy.
Sure.
And look, this goes against a lot of what I believe in, what I'm about to say. But I don't believe that corporations should be allowed to own single family homes. Period.
Ooh, hot take.
I agree,
Period.
dude. I agree.
Period.
That's
I'm
very
fine
healthy.
with real estate investment trusts owning multifamily homes. I'm fine with them owning apartment complexes. I'm fine with them owning commercial real estate. I'm not fine with a corporation owning a single family home. When you go into the marketplace and you are bidding on a house or you're putting an offer in on a house, it should be player versus player. If you're going to lose, you should be losing to another individual private citizen, not BlackRock. And that is a big problem, that so many corporations are buying up single family homes. And you want to know why rents aren't decreasing either? Look at the amount of corporations that own single family homes.
Yeah.
It's crazy. I mean, you should not be bidding against BlackRock.
Yeah. And look, the more homes that BlackRock buys,
not good.
It's not good, but it's also a losing game. It's a game that it drives you to zero because they're going to keep buying more and more. If we go back to the Thomas Piketty example that I highlighted 20 minutes ago, the rate of return on capital increases more than the economic growth rate. BlackRock buys up 50% of the market. They will then collect all of the proceeds to buy up the remainder of the market. And what happens when that supply diminishes for every individual? All of the remaining houses in the market get so much more expensive and so much more unattainable. And the only people that can attain it is BlackRock.
And so why it gets more expensive? Because BlackRock can keep writing checks.
Exactly.
Infinitely.
It is a real problem that I don't see anybody addressing.
This has been a depressing episode, boys.
No, but I mean, it's the truth. I mean, you need real reform.
Absolutely.
To help private citizens. I mean, private citizens are not built to compete against BlackRock or any of these REITs. And look, I'm invested in several REITs, okay? I do not believe that any of these companies should be owning single-family homes.
Agreed. Yeah.
It's not good for anybody.
Yeah, there's a lot of supply coming on the market, but man, that's one of the big issues with housing. That's why when you were talking about the supply side, I'm like, okay, well, what's the solution for housing? And there it is. I mean, that helps immensely. There's a lot of new supply coming on, especially in multi-home. Airbnbs have soaked up some of that. I don't have as big a problem with Airbnbs at all, to be honest. I think that was just kind of a blip during the low interest rate environment. I don't think that's reproducible. But yeah, the corporations buying up a crazy amount of homes and making it so there's a lot less supply, and so demand is sky high.
Right,
man. We fixed all the problems, guys. But no, it is depressing. But there are realistic issues. I'm still like, I don't know. I have 5% cash, maybe. I'm still very much invested. I'll continue to invest. These are problems that are on the horizon, but yeah, the American economy is strong. Innovation is extremely strong right now. I think startup culture will come back as interest rates go down, and they will go down at some point. Economy is good. There's a lot of good things, but yeah, there's long-term problems that they're systemic, that if they're not fixed or dealt with this decade, I mean, I don't think that it'll kill the United States, but it will cripple the United States. We'll see something like, for different reasons, what Japan went through, where they have basically a lost 20 years. Yeah, it may not be stagflation even necessarily, but I could see some crippling influences that take, a whole generation, a lost generation, just to go through.
I mean, generally what happens in economic cycles when we reach these levels of extreme imbalance is conflict. The reason why is because conflict is the one instance where assets are destroyed, essentially, cities are bombed, whatever, at least, World War II, World War I. And as a result, the people who own all of the assets are hurt disproportionately to just the blue collar working man. And that's a way of rebalancing the scale, so to speak. And, I just think that at this point right now, we are lulled into a state of ignorance and submission backed by that ignorance, because it is, ETF mentioned this, right? It's completely NIMBYism, right? All of these states are acting independently. All of them are, to a certain degree or other, self-interested. They all have ulterior motives. I think the average age of all of these senators has been going up and up and up. And so how can you expect these senators and these politicians to have a 50-year horizon, a 100-year horizon, when, they're 80 years old, right?
Yeah.
Not only do they have the cognitive ability to make decisions like that, they're in cognitive decline, which is a risk in itself, but at the same time, they don't have the proper incentive structure to actually make systemic, meaningful changes, because there's broad sweeping disagreement across the classes.
It's tough. You got a super chat, by the way.
Yeah, let me read that. Yeah, George, thank you so much. I appreciate it. Yeah, thank you. So, long story short, this is also why I am in favor of young politicians with families, because I think their incentive structures are going to be more aligned with me as a young person, to try to be optimistic, or at least to stoke some of that optimism in this entire generation, and to recalibrate some of that disenfranchisement that we're seeing between boomers and Gen Zs, and boomers and millennials, let's say.
Yeah, there's a lot of division, and it's definitely a problem where in the large part, younger folks, we'll have to see how they actually vote, as far as the percentage that actually votes in the election, but it's not been increasing through generations. That's just a lot of political disenfranchisement.
Absolutely, man. It's been actually declining, right? Like, we had a city election here in Toronto, and it was this candidate that literally everybody hated. Everybody hated this guy. And he won again. And the reason why he won again was because I think it was less than 35% of people actually voted. Less than 35% of the actual population voted. I think it was like 30% or something. And then of that 30%, he barely had half. And so I guess he won. So basically 15% of the, city decided who this next leader was going to be. And the only reason was because everybody else was like, fuck it, they're a scam, they're rigged, they're whatever. And they didn't even go out to vote. And I just that's the thing that kills me more. It's if I really believe that, hey, I have my future in my own hands and I can make that change. And, I can make the next 10 years or the next 20 years better for myself, for my children, whatever, then great. I'm going to go out and do it. And I'm going to feel empowered to do it. But if I don't even feel that baseline motivation, then that's where you sort of, I don't know. Yeah. It's corrosive, right?
Oh, yeah. Yeah, here. So, and I think young people will be even more detached this time, just because we're getting a sequel, and sequels are never as good as the original. So I know that Trump has some diehard support, and Biden, I don't think people love Biden quite the same way. But I mean, most people don't. These are not well-liked politicians, and yet, barring something very strange, they're going to be on the docket. Number one, number two, we're going to be deciding between them, and you can always vote third party, write somebody in, whatever. Respect that. I've done that before. But I mean, young people, are they going to turn out in droves and be like, yeah, Biden, yeah, Trump? I mean, a few will, but a lot of them will just be like, whatever. Like, we're going to get more Biden, more Trump. It's going to suck. We've already had that before. So that's not good. So it's not good at all.
Let me ask you this, right? Ask your son, right? He's what, 21, 22? And be like, hey, who would you rather vote for? The answer that I get when I ask my friends is, they're all fucking shit. They're all horrible human beings that are either stupid or negligent or corrupt. And I don't know which one's worse. They all suck. And so the point is, it's like, well, how can you not get disenfranchised when you have no good options? And then you have to think to yourself one level deeper, why don't we have good options? because it's not the people who actually pick the candidates, it's the parties that pick the candidates. And so the people might really like a certain candidate that's, young, has fresh ideas, like the Yang or the Vivek or whatever. But at the end of the day, the party's going to pick, their old pals. And, the fact of the matter is Biden's been in politics for 40 plus years, and he knows he's rubbed shoulders with all of them. They've all sort of been on the come up together. And so the party's going to pick who the party's going to pick. And so that, I think, is one problem. It's sort of this representative, democratic system. It's not a direct democracy. The second problem, I think, it's a long feedback loop. If you want to make changes, you got to wait 4 years. First of all, that's an arbitrary amount. Who picked 4 years? Why is it 4 years? Why have we not changed 4 years? Second of all, we now have the technology. Everybody has like an iPhone in their hand. Why can't you have a direct democratic model where if you have big issues, people can just vote literally through their phones? Why can't you have a system where you can change politicians on a yearly basis as opposed to a 4-year basis, not by fucking marking down ballot boxes, but by literally doing it online via your phone? Like some of these methods are still so archaic, and it's just not conducive to the age that we even live in, man.
Yeah, I don't think I'd go that far to a direct democracy, but there's definitely reforms that can be done. And yeah, as far as my 21-year-old, he was old enough. He turned 18. He was like, yay, I get to vote. This time around, he's like, why would I vote? And it's sad. My 19-year-old, he was not old enough. So he's excited to vote for the first time. He's not excited by the candidates. And I hope that this is not his last time voting either.
Dude, but if you just think about that, a 21-year-old who's like, yeah, I'm not going to vote, that is the most depressing thing to me, because what does that show you for the future of that country when the generation who is just entering the workforce is refusing to vote, not because they disagree with a certain politician, but because they sort of see a complete lack of hope in the system itself?
Yeah, I'm actually going to write in Steve, but I'm going to get your name changed to Esteban, so you can reach more demographically. Yeah, we'll go from there.
That sounds good to me. Shall we call it here, gentlemen?
Sounds good. Let's vote on it, I guess.
Everybody, thank you for watching. Nobody said the magic words tonight, so sucks to be a charity, I guess, because nobody is going to be donating. We will see you on Friday.
Oh, you almost slipped.
I almost said it.
Hold it together, man. Hold it together.
I know, just for like a couple more minutes. Like and subscribe. We will see you on Friday for the other show that we do together. And the Bootleg Weekly is alive and well. We do this on a weekly basis, generally on Wednesday, but we did it on Tuesday because the other gentlemen in this panel actually have a love life, and tomorrow is a special day for them. Roy is married. We don't want to cause any qualms in there. But Bootleg Weekly will be back next week, hopefully.
Wow. Tomorrow's Valentine's Day?
Yeah. It is. So,
you're welcome.
Yeah. I love all the Tanner. I don't understand why we're getting so much Tanner hate.
Are we kicking Tanner off the Friday episode?
What Friday episode is that, Steve?
You know what I'm talking about.
What would we have to talk about then? That's what Bootleg Weekly is for, not that other weekly.
Is this how your Valentine's Day goes, Steve?
So I have been acquiring more boxes of Pokemon cards.
Yeah, everybody.
Is that going to be the Valentine's Day gift? Is your wife into that?
No.
Everybody who has not done so yet, please go follow Steve's channel. He is now on YouTube after much harassment from the rest of the panel. Steve, you want to plug your channel?
No, not really.
It's called Alternative Asset Weekly. He talks about Pokemon cards and baseball cards and all kinds of boomer shit. He has graphs and charts, and you're going to love it.
Did you say boomer stuff?
Yeah, exactly.
How is that boomer stuff?
A baseball card, bro.
Cards.
I have not seen one in my lifetime.
Okay. I'm just going to say to you, you know who Patrick Mahomes is, correct?
Yeah, the football guy.
Okay. He was just asked about his rookie cards, and he said in an interview, I'm going to text it to you, he wishes he owned the $4 million rookie card of himself,
That's
and
kind of
that he actively buys his cards.
Thank you, Matt. Matt, for the assist. Oh, look at that. I used that term. Who else used that term recently for the assist? Strange.
What are you talking about?
The NBA thing.
Yeah, there was some company that came out with some NBA scam. I don't know. Well, maybe we'll talk about it later.
We don't know anything about it. Okay, I'm going.
I think I saw somebody hating on it for some reason.
What's that?
I think I saw somebody hating on it. I don't know.
Save it for Friday.
On that certain company. Okay, cool. The chat is full of Tanner shit. I think Tanner is the new Roy. But nobody can.
No, because Tanner cannot start a fire from raindrops.
Yeah, I saw a couple of Roy things here. Okay, see everybody. Thank you for watching and listening, and we will see you next week. Message us on X and let us know what you want to see next week. The benefit of this format is a couple benefits. Number one, we don't have Tanner. Number two, we can talk about what.
Wow.
we can. No, I love Tanner. We love Tanner collectively. But we can talk about whatever we want. We don't have to talk about that specific stock that we all know.
That he forces us to talk about weekly.
So, in all seriousness, if I told you that sealed Pokemon product has outpaced the S&P 500 consistently, would you believe me?
Yes. No, I've seen the PowerPoints, dude. Steve has full PowerPoints about this shit, and I've seen them. I've read them. It actually makes sense. We can invite you onto your channel, Steve. You're a content creator now, and then we can talk about it. I'll share my thoughts. Or we can do one of these episodes here where you walk us through the macroeconomics of Pokemon cards.
It is freaking amazing, to be honest with you.
Okay. All right. Any last words, gents, before I wrap?
It's been good. Yeah, we had some depressing topics, but in all the stuff that's happening, like with political stuff, like you can go the opposite side of that. And instead of just being ambivalent and apathetic, get so caught up in it and consumed by it that becomes your central guiding force, your worldview or whatever. That destroys it more than anything. So I have two resolutions this year, and one of them is very qualitative. I can't quantify it, but it's to celebrate more. And so really, like, just look around what you got in your life, the good things, the positive things. Enjoy the moment. You might be looking forward to something and like hating where you're at right now, but I guarantee you, as an old man that's 43, not really that old, but every single point in my life, there are things that I'm like, man, I really miss that thing or that time or this place or that person. So enjoy where you're at. Don't forget to celebrate along the way. Don't get consumed on like what might or might not happen, especially with politics.
And what I will say is, I mean, we still have like 100 people watching. These are difficult conversations to have. They might be difficult conversations to listen to because they reflect a reality that might not be aligned with the reality that, we had in our upbringing or that we want to be living in. The fact of the matter is that these are also necessary conversations to have because, and if there's more young people listening, that's something that should be coming up more. And it's something that should not get young people disenfranchised about the future, but it should get them optimistic about the prospect of changing the future positively and them having a role in that. Because, I mean, that's sort of the surroundings that I'm in right now. It's a lot of people around me are just sort of disenfranchised or checked out. And I think more of these conversations will get people sort of more encouraged to take part in being that change, right? Now that I've gotten all cheesy, I will end the stream. Thanks, everybody. See ya.